Hello everyone, this is Manav Modi, your bullion analyst. Welcome to the Commodities monthly overview. Talking about precious metals, it was a new year fireworks for bullions in the start of 2023. Gold marked about a 4% return in January, whereas silver continued to trade in an uptrend. However, things started to take a turnaround when we received the positive US jobs market data, which supported the move in dollar index. We've seen US inflation numbers being reported at 6.5%, falling from a peak of 9%, which was a key trigger for an upmove in gold and silver prices. We've seen that gold continued to mark lifetime highs on the domestic front as strong move in COMEX as well as rupee depreciation supported the overall price up move. As per our expectations, we've seen in the Union Budget, Finance Minister kept the gold duty unchanged, whereas silver duty structure was revised from 10.75% to 15%. Also, major central banks kept the overall monetary policy rate hike as per the market expectations. We believe that economic data points for this month will be very important. Both gold and silver prices have performed well, but slight profit booking could be expected for gold. 56,000 could be expected, and for silver 66,000 could be expected, and this could be a good accumulation zone for medium-term investors. Base metals have had a cracking start to the year, giving about 10 to 15 sort of returns in January 2023. However, things started to change as China reopened after the Lunar New Year holidays. China ease off in the zero COVID policy has increased the demand prospects for metals. We've seen that fall in inventories, especially on LME, has limited an immediate downside for metals. However, recent accumulation in Shanghai warehouses is signaling a strong accumulation zone for China. We feel that China's reopening of the economy has suggested some sort of positive sentiment, but we feel the timing is a bit off, and further clarity could be we could get further clarity in the second quarter. As per the outlook, we feel that aluminium and copper remains our favorable pick, and any downside towards 215 and 750 on MCX could be a good accumulation point. Oil prices were in a corrective mode last month, giving up about 1.5 to 2% sort of a gains. Market participants are divided currently between the optimism of China's reopening story and a gloomier growth outlook. To stabilize the prices, US crude inventories are down by about 20% on the year-on-year basis, with SPR 37% lower. President Biden has announced some plans to replenish the reserves. If this happens, it could be a big turnaround for the prices. Currently, market participants are between Russia on the supply side and China on the demand side. IMF's recent report also suggests a lower risk of the overall global growth slowdown, which also has filled the market with optimism. Natural gas prices have fallen by about 40% last month. It was pressurized by non-favorable weather forecast and record high US production. Reopening of Freeport LNG could also provide some trigger to the natural gas prices. Talking about overall energy complex outlook, we believe crude oil is a bit mixed. So any break between 6,000 and 6,500 could lend to further direction for the prices on domestic front. However, natural gas prices from the peak has fallen by about 70%. So some rebound could be expected. However, this counter is not for the faint-hearted. Stay tuned for more updates on commodities and currencies. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.